All right, we got some time left to juice it up even more, maybe. Kevin Green joining us to look at the options flow. We're at the highs of the day, basically, KG. Is it now or never to ramp it up?
Pretty much. We are hitting the positive gamma level if we're looking at the volume chart here. It actually, when you're kind of looking at this, we've seen a wide range of movements throughout the day, and it's really been flows that have been really matching these type of movements and reactions. So if we're able to actually break up above 56.35, that could kind of unlock this melt up to the upside, and that actually could be hitting the 56.50 level, which would be actually pretty remarkable here, to say the least. If we do kind of break down, I would say 5600 would be your area of pen risk, obviously, in the near term, or at least the next 30 minutes here. And from an open interest standpoint, we can kind of see we've been in this channel that I have drawn on here pretty much the whole day, and then we actually saw a nice little breakout to the upside. What you want to do is continue to get away from that channel. You don't want to go back, retest, or even get back into that channel, because that would be ultimately bullish. But once again, we'll probably see a little bit of headway here between 56.30 to 56.35. If we can kind of break through that on large volume, then we could probably actually see 56.50 at the end of today's close.
All right, so that would be a big successful day if we can manage to push it up to 56.50, and then from there, I guess 5,700 is the next job for next week. That's NVIDIA's responsibility. Powell got us to 56.50. Maybe NVIDIA gets us to 57.
That could be the case. I mean, 56.50.
Well, he hasn't gotten us there yet.
Next week as a I mean, even for next week, that wouldn't be that high of a bar. You're only talking about another 20 to 25 points to the upside. And you know, Wednesday is going to be NVIDIA's earnings announcement. What I would say though is we had a nice little rally here today. We had a lot of call buying taking place here. So what could actually put this at risk going into the remainder of this close is going to be those calls actually unwinding. You have those individuals trying to sell out of those positions, and then that's when you have dealers really taking off those long futures contracts. And that's where you could have this meltdown scenario taking place. If you kind of notice, and maybe you don't, but for this week, we've been talking about this 56.30 level a lot. And so it's kind of interesting to say that we kind of round tripped the whole week, and now we're kind of pressuring the upper end of this range, and now we're trying to break right through it. Let's see if that's going to actually happen. But it has been fairly sticky over the last couple of trading sessions.
Okay. All right. So at this point, obviously a good day so far. A lot of it, though, is also happening in the small cap world and stuff. So obviously we talk S&P here. And it's not quite as juicy maybe, but like it still seems like the flow is definitely net bullish, obviously.
Yeah, so I would say if you're looking at the small cap flow, the Russell options themselves don't see nowhere near the flows that you see for the SP 500 and the NDX, right? It would actually rank out the S&P 500 number one, NDX number two, and then the Russell number three. What you kind of notice with the Russell, though, it's really on the individual basis or a sector basis, and the one that's really pushing it to the upside today is going to be financials. That's really what's giving it its steam. I don't think there's any type of dealer flows that are really impacting that Russell move right now. It does seem to be fairly organic for that move. I would say more towards the flows that we saw in the S&P 500 today were really driven by SPX flows, as well as what was happening on the future side. Just kind of one thing to note, we saw a lot of choppy action in these gap ranges where we would move 10 points to the upside or 8 to 15 points to the downside here, Oliver. And that was actually just a function of lack of liquidity. And so we continue to see liquidity actually contract. I don't have a chart of that here for us today, but we can capstone that on Monday. But that liquidity is now starting to get back into the market. If we can have this bull run and we can have this gamma squeeze to the upside at the end of the day, that would actually be a really bullish sign to try to get us out of this range that we've been trading in and trying to break through over the last 5 trading days. And we know that we don't want to stay in that range for too long because that will give bears the influence to think that maybe we're in a near-term peak. And as you talked about with Risk Radar yesterday, could we see a double top? Now, obviously, you didn't say that is going to happen because of the characteristics of it, but that's what I got my eyes on it. Bears would I highlight there.
It's like the last hope basically for bears. Right. It's like
exactly. Yeah, they only have a gap. Yeah, they have another gap sitting actually at 56.30 is the start of the gap, and so that's the last one for the major pull down that we saw for the last 2 weeks. And it's going to be a hard one to actually break through. And we highlighted that earlier on this week. But if we are able to break through it, especially on a Friday, and when you're kind of looking at your weekly charts over the weekend, it makes a bull feel a lot more confident that this move can continue.
especially because we've been kind of a little hesitant into the weekend after the yen blow up and all that stuff. So it really shows some confidence. Seems like basically it's now up to bulls to kind of seal the deal, to get us through these last marginal levels, to push out of this kind of range, this chop we've been in this week, that then puts us on the course to the new high. To your point, basically the only way bears could get through here is if the range holds, because we're not getting any weakness. We got one drop and then it came right back this week. So it's not like we've got any, lower highs or anything. Like, everything looks pretty darn good right now. So VIX, I want to ask you about KG, because when we had VIX up, stocks up, then when stocks sustain the rally and extend, you get VIX to get hit pretty hard. But I don't know, it's not collapsing today.
Right. Yeah, it's not collapsing. And actually, when you're looking at it from a seasonal basis, it's actually at a fairly low level, sitting around the 15 handle right now for today. So we're seeing the positive, or the normal correlation right now. Stocks up, VIX kind of moving to the downside. You're seeing volatility kind of getting priced out of the market. One thing to kind of note, implied volatility, which would be kind of measured by the VIX in a sense, it's a metric of the of implied volatility for the S&P 500. In realized vol is still actually at pretty much the same levels. So we probably will see either a little bit more of a stickier VIX to try to, because usually implied volatility is higher than historical. So probably maybe a stickier VIX at these levels right now, or you could see a situation where we actually do range. I just want to kind of highlight just real quick, 'cause I know that we're going to be going over here. If we can bring up the volume exposure chart just for today's chart here, you can see that fade of the 5630 level happening at this point in time. Now, it's not an aggressive fade, but what I do see on the back end here, Oliver, is that unwinding of calls. And you and I have been kind of talking about that. In order for us to have this push to the upside and for us to keep it, you don't want to have an unwinding of those bullish flows. And right now, it does appear that that's happening for now. We obviously have around 20 minutes, 22 minutes left to go in the trading session, but that's not the sign that you really want to see, or rejection of that positive deal level. That could actually, once again, see us a little bit revert, and then the 5608 level, I think I have it on there, is going to be your balance level for dealers to be net neutral on the session here today.
Got it. All right. So maybe there's a little bit of a draw then to get us to kind of that 5608-ish. And I guess I have to correct myself a little bit, because as we're seeing on the intraday chart, we've got the lower highs, but that's just, intraday. But man, it's worth something. I mean, still got 20 minutes left. So if we end up going into the weekend at a level that we've seen all week, then it does kind of, dampen a little bit of the animal spirit kind of nature. All right. Thanks, KG. Good stuff.